So it's finally here. With the latest changes in CPF shielding will no longer work anymore. So 1M65 dream destroyed liao? In this video, I'll be covering all the latest changes to CPF that you need to know about. How will it affect you? And more importantly, what you can do to continue squeezing more money from the government. And by that, I mean earn more interest from CPF. Also, do join my 7,000 members Telegram group to discuss or ask any questions that you may have. Alright, here are the latest changes to CPF. First up, CPF contribution for those aged 55 to 65 will be increased by another 1.5% in 2025. So essentially, what this means is that after this change, if you are between 55 to 65, you will need to contribute an additional 1.5% of your salary to CPF. I guess this is just a relatively minor change. For those people who like CPF, they'd be like, CPF one sweet! I get to earn more interest and higher payouts from CPF. And for those who don't like CPF, they'd be like, ah! Second, the enhanced retirement sum will be raised from the current 3 times of basic retirement sum up to 4 times of BRS. So in 2024, you can only contribute up to $308,700 into your CPF RA. But starting 2025, it suddenly boomed, shot up to $426,000 instead. I feel this is quite a good change as it benefits rich Singaporeans who wish to earn higher payouts by topping up more money into their retirement accounts. But now comes the most controversial change. From 2025 onwards, CPF SA will be closed for those aged 55 and onwards. So you mean all my original SA contributions will go into RA and get stuck in there forever? No lah. So how this works is that at 55, CPF will, as usual, transfer your SA savings into RA up to the full retirement sum. But then, because there will be no more SA after 55, the remaining of your SA savings will go to OA. As for your monthly contributions, the original SA contributions will now go to RA instead, up to the full retirement sum. But if you have hit FRS, the contributions will go into OA instead. But perhaps there are 2 bigger hoo-has here. Hoo-ha 1, after 55, you will no longer be able to earn a steady PP 4% interest from SA. And that's bad, right? Because before this change, as long as you have hit FRS after 55, all your money in SA can be withdrawn. So your SA basically turns into this super high 4% interest ATM, where you can happy keep the money in SA to earn a high interest. Or you can happy withdraw the free money whenever you want. Currently, none of the banks are able to do this. Even UOB 1 requires you to meet some criteria in order to start earning a 3.85% interest. Then, hoo-ha 2, without SA after 55, CPF shielding will no longer work. Oh. For those who do not know what CPF shielding is, here's a beautiful image by Sense of Independence which explains this strategy. So, when you turn 55, CPF will create your retirement account for you. They will first take the money from SA to form the full retirement sum in your RA. And if there's not enough money in your SA, they will take the remaining amounts from your OA. The problem with this is that after this is done, you will end up with a lot of money in your OA, earning that tiny 2.5% interest. And not a lot of money in your SA, earning that 4% interest. And that is not so nice, right? So what CPF shielding does is that right before you turn 55, you take your SA money and use it to invest in a short-term bond fund. Then, when you turn 55, CPF will have less money to take from your SA and will be forced to take more money from your OA to form the FRS. Once that is done, you can just sell the short-term bond fund and return the money back to your SA, where you now have more money in your SA, earning that sweet 4% interest. So that is CPF shielding, and this no longer works now. As expected, many people were unhappy with this change. Some be like, le kwa la, see those 1M65 people publicize this. Others be like, because of people like Kel and Chris sharing this hack, everyone is now doing this, and CPF has to close this loophole. The news article is even more fierce. In 2022, this MP Miao Win Yong brought up this issue in Parliament. Though, at that time, MOM said that only 2% of CPF members did CPF shielding, and they'll monitor the trend and take action if necessary. So I guess unlike popular belief, the government doesn't just monitor and never do anything, yeah? When they say they'll monitor, they'll really be like, and really take action if needed. Quick pause. Weibo has finally launched SGX trading. And this means you are now able to use Weibo to invest in SGX stocks, REITs, DLCs, and ETFs. This is fantastic news because 1. if you are new to Webull waives off SGS trading commission fee for 3 years, though you will still have to pay the platform fee. And even without the fee waiver, Webull charges a very low pricing of just 0.05% of the total trade amount, with a minimum of $1.60. 2. Webull supports odd lot order for eligible SGS stocks. This means you are able to trade with as little as 1 share, instead of the usual 100 shares. This makes investing in SGS stocks a lot more accessible to individual investors like you and me. And 3. Webull's Money Bull lets you earn a yield on your idle SGD funds, thereby optimizing the utility of your idle cash while you are waiting to invest your money. Also, if you sign up using my link down below, fund $2,000 into the account and keep the money there till 31st March 2024, you will get to win 100 SGD worth of Tesla shares. But if you are able to fund $100,000 and maintain the funds till 31st January 2025, you will get to earn $2,500 worth of Tesla shares. Webull also launched a new transfer promo, from which you could possibly get up to 3,000 SGD worth of free shares by fulfilling the requirements. So if you are interested in trying out Webull, do sign up to them using my link down below. With that being said, let's get back to the video. But now, how will this change affect you? 1. Obviously, you will no longer be able to earn a withdrawable 4% interest from SA, and instead will only earn a 2.5% interest from OA. But the bigger implication is that now, it suddenly becomes a lot more important to hit FRS before you turn 55. That's because even though RA also lets you earn 4 to 6% interest, which boosts your CPF life payouts, technically, this interest doesn't belong to you. Because when you pass away, CPF will retain the interest earned and use it to pay other CPF life members. So it's not your CPF interest, it's our CPF interest. Meanwhile, for SA, all the interest that you earn is yours to keep. Wow, then like that how? 1. Don't kanchiong lah. This change won't occur until 2025. So if you turn 55 this year, ho sei liao, you can still do CPF shielding this year. But the rest of us how leh? As for the rest of us, do try to hit FRS before you turn 55. This can be done in a few ways, right? For example, you can do the usual $8,000 top up to your CPF SA while getting tax reliefs. Or 2, you can transfer your OA to SA to earn as much interest as possible before 55. Though, just make sure you have enough money in your OA for your housing lah. Or you can make voluntary contributions to your CPF up to the annual $37,740 limit. But then, there's no more free 4% interest after 55 leh. For this, I guess you have no choice but to LL suck thumb and just look for investments that can give you that kind of return lor. Here are some examples. 1. Singapore T-bills. For example, the latest 6-month T-bill had a cut-off yield of 3.66%. 2. Singapore Savings Bond. The latest 10-year yield is at 2.88%. 3. Money market funds, where the latest yield is around 3.78%. But of course, these high rates won't last forever. As shown by this chart by investment modes, in low interest rate environments, the SSB yield could go to as low as 0.8%. So probably a more long-term solution would be to look at Singapore dividend stocks that can pay you steady PPP dividends every year, such as those bank stocks or REITs. The good ones I mean, not the bad ones where they can boom 18 levels through the floor. Generally, good dividend stocks have a yield of around 3 to 6%. Yes, even though stocks can go up and down, if you look at those good REITs, the dividends are pretty stable and they will typically raise dividends over time. Which means, if you invest now, 10 years later, your dividend yield would have increased, which by the way, is how millionaires like AK71 and Lady You Can Be Free got rich from dividends. In fact, given that most REITs have now gone down over the past few years due to high interest rates, this may now be a good time to start investing in REITs before interest rates start to come back down this year. However, if you really want to withdraw money from your retirement account, there's actually one way. You can pledge your property and withdraw up to the basic retirement sum. Oh Che, I thought just now you said cannot withdraw from RA. Nah, like that I can pledge and withdraw all my interest ma. Well yes, but no. You can only withdraw your contributions excluding the interest earned. And of course, while this is a good way to get back some of your money from CPF, if you withdraw just like that, your CPF payouts will go down. So only do this if you really have other means of supporting your retirement expenses, yeah. Otherwise, this will put you in a much worse situation. Okay, here are my thoughts. Despite all the recent CPF changes, the 1M65 dream is still very much alive. Though, my unpopular opinion is that the government made the right decision to remove SA after 55, as it's actually not sustainable for them to guarantee this 4% interest over the long term, especially when you can withdraw the money just like that. But perhaps this should serve as a wake-up call for anyone that we shouldn't rely too much on CPF for our retirement needs. While CPF life is nice and all, there's still policy risk, and nobody can say for certain what the interest rates or payout will be like in the future. Heck, they even mentioned that CPF life payouts are not guaranteed and it can change depending on whether people live longer in the future or when interest rates change in the future. So I guess the best ways is still to improve your income, invest your money, and anything that comes from CPF is a bonus. Anyway, that's all for this video. Hopefully you found this useful. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.